Hello and welcome to the Swift Business Forum New York. I'm Joy Macknight, Deputy Editor at The Banker, and I'm joined by Emma Loftus, who's Managing Director, Head of Global Payments and Receivables, Treasury Services at JPMorgan. Emma, thanks so much for joining us today. You were just on a panel talking about sort of new developments in domestic payments. What was the outcome of the panel?
It was a great panel, a lot of really collaborative dialogue. So we had a representative from JPMorgan, myself, Bank of America, the Clearinghouse, and EWS, who are some of the key players who are introducing real-time payments in the US. So talking about what are the challenges, what are the use cases, how is everyone equipping their clients, made for a pretty lively dialogue. And we got a lot of good questions from the audience as well, so it was fun.
What would you say are the main challenges to moving to real-time payments?
Ubiquity. Everyone says ubiquity. What is ubiquity? It's getting the banks to pay and receive across the US. Big value proposition. There are more than 8,000 financial institutions in the US. So when you think about adoption and you think about implementation, thinking about each one of those financial institutions, implementing it in their own back office, and then working with their clients to be able to actually use sending and receiving real-time payments, it's a big endeavor. But we're all in. JPMorgan's live for pays and receives. We're working very, very closely with the Clearinghouse as they're implementing some of the other major US banks. And we think as soon as we have critical mass, that'll be the tipping point. And then we'll start to be approaching the downward slope on ubiquity in the US.
Okay, and what are the benefits for corporate clients, let's say, of real-time payments?
So thinking through it's been actually a really interesting exercise for us in working with our corporates, explaining what real-time payments is, how is it different from check, how is it different from ACH, same-day ACH and wire, and then how can they actually use a real-time payments to enhance their client service experience, eliminate paper, add efficiencies into their workflows, and actually leverage the message set that's embedded in the RTP payment to help transport more data and more contextual information with those payments. So what does that mean? We actually have to work with the corporates to say, okay, here's how your workflow works today. Would your customer experience be enhanced if you were able to embed an ability to deliver real-time payments at the point of a customer service inquiry? Would your customer service experience benefit if you could drive that real-time experience into that interaction with your client? And then it's like, hey, actually, that would add a lot of benefit. How do I go through and figure out how I can architect that on my side? Another great experience is this request for payment that's coming. So working with some of our big corporate clients that do a lot of consumer billing, re-architecting how that experience from the consumer to the biller can eliminate and all the friction in that process that exists today, because we're actually maybe delivering a physical invoice and someone's writing a check, ripping off that coupon and sending it in the mail back to a lockbox. Transformational. And working with some of our key clients on how they can completely automate that experience from the handheld that a consumer interacts with their financial institution to the biller, delivering that automated experience. Amazing. Those are the types of really transformational opportunities that I think are going to light up the whole RTP experience.
And are you working on specific use cases? Like, how are you really going to prove these benefits?
So for many clients, the easiest, I think, discussion to have is if payments is a differentiator or an ability to pay faster is a differentiator for their business. Good example is the gig economy right now, where consumers want to be paid almost at the time the service is delivered. Today, some of the other payment settlement mechanisms that exist don't allow you to have that immediate experience. Retailers, a great experience. Moving away from weekly, bi-weekly, monthly pay cycles to potentially daily pay cycles is a differentiator for them to bring talent into their organization, because they can actually pay in a way that the worker would actually like to be compensated. That's great, because for them, that helps differentiate that experience. Some of the more complex use cases is where technology is going to have to be deployed to actually help the client transform their back end.
My last question is really around another buzzword, which is blockchain.
Okay.
Do you think blockchain is going to have an impact on domestic payments?
So it's hard to have a conversation at all these days in payments and not have someone say, well, what about the blockchain? What's blockchain going to do? For domestic payments immediately, there are distributed ledger and the technology underlying blockchain has tremendous value. For moving money, a real-time payment experience, moving that to crypto or moving that to a blockchain right now, I don't see it coming immediately. I do find that there are use cases for it. We've done some experimentation at JPMorgan for value transfer on the blockchain. And I'll be honest with you, moving everything we do today for money movement to a blockchain didn't have a business case for us because the way that we process today and the automated nature and the end-to-end straight-through processing rates we have can actually move the value a lot quicker than actually blockchain could actually deliver for us. Where we do find opportunities for blockchain are these point-to-point connections around resolution of inquiries, whether it be a compliance inquiry, potentially a fraudulent inquiry, connecting banks together in a blockchain where information can be exchanged in a secure manner, short-circuiting phone calls or emails, bringing that all into a distributed ledger, that may have opportunity, but I don't see the value transfer anytime soon.
Okay, great. Thank you so much for your insights, Emma.
Thanks very much.